Would you be surprised to learn that showings are down 20% year over year? Well, if that's something that's interesting to you and you want to know more and even lots more statistics, stick around. We're going to talk about that next. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty with your May 2025 real estate market update. So what's going on here in May of 2025? Well, there's always lots going on. Finally, we've got a little bit of dry weather coming, but I know you didn't come here for a weather forecast, so we're gonna go ahead and jump into the statistics that I mentioned in the teaser next. And the first statistic we're gonna talk about is showing activity. Now this is something we don't normally talk about, but it goes kind of hand in hand with inventory, and I wanted to kind of talk about it real briefly. As a professional real estate agent, I study the market daily, and this is a statistic I look at a lot. To me, it's a measure of the market velocity. How fast are things going? How much activity is going on? This year, it is down 20% compared to last year, and that statistically, from a raw data standpoint, is last year in the price range of 300 to 400,000, which is where the average Columbus home lies. We had 2,286 showings. This year, we only had 1,823 showings, and this is specifically from April 7th to May 7th of each of those 2 years. So what does that tell you? Well, less houses are being looked at. Now, that would make sense if there weren't very many more houses on the market, but we're going to talk about that next and actually kind of lead into inventory. So inventory this year is actually up 48.6%, which is, it sounds maybe a little bit crazier than it really is, but there's 3,736 houses on the market today. Last year there was 2,514. So that's about a 50% increase, but still the number of homes on the market from a market absorption or a months of inventory standpoint is still only about 1.3, 1.5 months of inventory. And that is definitively in the seller's market category. So if I take those two statistics, how do I sum them up? Well, there's more homes on the market. They're getting less showings. And we're going to talk about a little bit more data first, and then I'll kind of wrap things up here at the end. The next piece of data I'm going to talk about are mortgage interest rates. Now I'm going to look at specifically the 30-year fixed mortgage rate as reported by bankrate.com. And today, when I looked it up, the average rate was 6.86 for that 30-year fixed. And last year on the same day, the rate was 7.19%. That's about 1/3% decrease over last year. Okay, so that's interesting to know. What does that mean when we compile that with the other data? So we have less showings, we have more homes on the market, and yet interest rates are lower than they were a year ago. So that tells you that mortgage interest rates are not affecting the showings activity in a negative way, or at least we don't think they are, because they're basically lower than they were last year. So I think we're going to need some more information to really make some more determinations. So from a pricing standpoint, when we look at last year, the average sale price in 2024 at this time was $362,000, and this year that average sale price is $376,000, and that represents a 3.9% increase. The average over time for the last, I think, 75 to 100 years has been right about 4% increase for the value of real estate if you smooth it out. 3.9% sounds pretty darn close to that. In the last few months, we've been above that. We've been at 4.3, 4.1. It's been slowing a little bit, to be honest with you, but we're still right in the average of things. And so when we take that data and knowing that we have a price appreciation of about 3.9%, and we add into that we have mortgage interest rates are about 1/3% lower than last year, and we have about 50% more houses on the market, and we're seeing about 20% less showings of those houses. What does that all mean? Well, to me, what that means is that if you're thinking about selling, you really have to be careful and make sure your house is in great condition, that it is priced well, and it shows well. Because when you get showings, you want people to really be interested. It also means that if you're buying, you're going to have a little bit more time to choose. You might not have to make an offer today or in 2 minutes if you want to buy this house that you're standing in right now. And so the good news is for trade-up buyers, I think this is really a great time to do that, because you can go look for a house and buy that house, get it under contract, and yet you're still going to be able to sell your house in less than 30 days or maybe a little over 30 days because the market's still going quickly. So I think those are the people that it's best news for. The second best news are people who are just buying a house, and those people finally can get a little bit of relief. They still can expect interest rates to come down over time. and maybe be able to refinance in a year or two to get to even a lower interest rate, but they're lower than they were last year already. Anyway, that's all my opinion for today. Of course, if you have a specific situation you have questions about, feel free to reach out. We'll set up a consultation that's customized to your unique position. Again, my name is Ryan Reynolds with Keller Williams Consultants Realty, your KW certified real estate planner. And as always with the Ryan Reynolds team, it's unlimited opportunities and exceptional experiences.